Hi and welcome everybody to today's event of the Digital Euro Association. My name is Jonas Gross. I'm currently chairman of the Digital Euro Association, and I'm really thrilled to welcome all of you today. We have a very exciting topic today to discuss, which is digital assets and the digital euro, a topic which is of really big importance. And we were also thrilled by the number of registered parties for this event. So thanks everybody for registering and for being here with us today. First of all, I would like to introduce all of our speakers today. We really have a great people with us today. So the agenda will be as follows: that I will very quickly present the Digital Euro Association, what we are doing. Then I will hand over to Johannes from the Austrian Central Bank, who will present on their kind of wholesale CBDC digital assets project. And afterwards, we will hand over to the panel with Simon, Mathieu, Max, and Johannes, which I will then introduce separately in the panel. Great. So yeah, what are we doing at the Digital Euro Association? We are kind of a think tank in Europe, which focuses on digital money, the digital euro, stable coins, etc. So we have been basically born 1.5 years ago. Now we are also an own legal entity and are a registered association in Germany. And we basically focus on three different pillars, which is education, community and community building, and collaboration. So what this means is basically we produce outputs related to digital money. So doing research around stable coins, around CBDCs, around other novel forms of money. We will actually soon start or launch working groups at the beginning of next year. We also do the events we are doing, for example, today, right, on a monthly scale. We also have an own podcast. So we really try to improve education around digital money, because we have seen that kind of the knowledge is, is kind of dispersed in the euro area, and there should definitely be somebody at least, focusing also on this educational aspect around digital money. Besides that, we are building a community. So we are quite happy that by today, we have a community consisting of more than 320 individuals who are part of the Digital Euro Association, and also approximately 25 institutional members, which we are really thrilled to have. So it's really our goal that we are basically the kind of entity people turn to when they have questions or inquiries about digital money in the euro area. And we then want to bring people from community together, right? So what unites us is basically that we are excited about digital monies, and we have all different backgrounds, different perspectives, and really want to bring together these really broad expertise around digital money within our association. And last but not least, we want to focus on collaborations. So of course, just having a community is not enough. We also want to bring people, similar-minded people together, also foster maybe joint prototypes related to digital money, developing applications by this. So also to have the practical dimension, which is as important or maybe even more important as a theoretical kind of perspective we are also taking play and or also looking at, for example, in the working groups. Yeah, can you become partner of us? It's actually quite easy. So there are two ways. If you are an individual, you can become a DEA fellow or a DEA expert. So this means that you can apply free of charge to become a member of our community. And if you have pre-knowledge around digital money and can kind of prove to projects that are related to digital money you participated with, we can consider you an expert. And if you are kind of new to this topic or start building knowledge around digital money, you would be a fellow. So this means everybody who wants to be part of our association can join, be it as a fellow or as an expert. And as company members, we have also two different kind of partnerships, active and supporting memberships, so also that institutions can leverage our network and all the services we kind of provide. So if you're interested in that, feel free to scan the QR codes here. Also visit our website. We will also in the YouTube chat post a few more information on these membership possibilities, and feel very free to reach out to us. Right, and before we start, we also want to thank our supporting members, which is Bundesdruckerei, Frankfurt School Blockchain Center, and C-Labs for all the support. And what I also want to mention is that if you decide to become part of the Digital Euro Association kind of this month, you also have the possibility to start working or contributing to our working groups we will start next year. Okay, so in January, we start a working group on CBDCs or the public sector digital euro. And we also start a working group related to the so-called private sector digital euro, which is kind of euro-denominated means of payments that come from the private sector. So if you're interested in that, feel free to apply as an expert or a fellow, or also as an institutional member, and then you can become part of our organization. Right, so here are just a few contact details. If you want to learn more about it, feel free to visit our website, also to follow us on social media. And yeah, then I'm really happy to start and to kick off today's event, which I'm, as I said, really, really excited. So I really love also the composition of the panel, that we have a few people from the public sector, so from the central banks, but also a few people from the private sector, which I think is a really good mixture, and also shows, and this is something what we as the DEA stand for, that it in the end is a mixture between private and public sector that is working and also should work around digital money. And before I hand over to Johannes and outline the agenda very quickly, also one comment: if you have any questions, we have a Q&A session later on, and you can just ask your question as normally at our events via Slido. So what you have to do, you have to go to slido.com and insert the event code, which is expressed here. We will also post it into the YouTube chat. And please, if you have a question to a specific expert, then please also state the name so that we can allocate the question to the right person. And if you do not do that, we will just ask the question to kind of like the person who wants to respond. And also very important, at the end of the event, we will answer the questions that have the most likes. So we try to be very democratic here. So the best questions are kind of answered in the end. Right, so let me just very quickly say a few words about the agenda before I hand over to Johannes. We basically have now a keynote on, I think, a very exciting project, and I'm really looking forward to hearing Johannes' insights here. It's a project DELPHI, which is a kind of a blockchain-based wholesale CBDC project by the Austrian Central Banks. And I think here the interaction is quite nice between how digital central bank money and digital financial assets can basically come together. Afterwards, we have a panel discussion from 5:30 to 6:15, which is 45 minutes. And then we have a Q&A session where we will respond to all the questions, or hopefully all, but maybe it's even more that we respond to the most of the questions you are raising. Great. So now I'm very happy to welcome Johannes Duong here. Johannes is a treasurer at the Austrian Central Bank and was also one of the driving force behind this project, because I read, like Johannes, the press release you announced a few months ago, and I thought this was really, really exciting. So thanks for being with us today. Give us a little bit of insights into your projects. And now, Johannes, the stage is yours. And yeah.
Thank you, Jonas. So I will share the slides. So can you see the slides?
Yes, perfect.
Yeah, okay. Okay, good afternoon from Vienna. So my name is Johannes Duong from the Austrian National Bank. And as Stefan mentioned already, I'm working in a treasury department, in the back office department. So we are responsible for collateral management and cash management. And I'm also responsible for the fintech topics. And one of our recent fintech project is the project DELPHI. So it's about deploying digital asset, in that case, a government bond on a blockchain, and we simulate the settlement cycle with a wholesale CBDC also on a blockchain. So before I go to the detail, it's important to clarify some points, is that the project DELPHI is a pure, solely Austrian National Bank project, and it has nothing to do with the digital euro project of the ECB. And besides, for us as a national bank, it is a research project, so there shouldn't be any indication that the Austrian National Bank is planning to launch a wholesale CBDC in the future. It's just only a research purpose for us. So before I start, why we set up the project is at the moment in the settlement world for financial securities, there are many custodians and intermediaries. So for example, we have a 2 days settlement cycle for a valuta day, for a value date. And between all the participants, there are lots of system interruptions and system breaks, and there are risks between the institutions for the settlement cycle, and there are lots of custodian and intermediaries. So there are costs and risk, and also reconciliation is very important between the different systems. And with the DLT or blockchain, for example, there was a possibility to reduce such intermediaries and also reducing the system breaks. So this could be a potential for more efficient settlement cycle. And here again, we see that the system landscape at the moment is in the settlement world is very fragmented, and also in the cost through the risk, and there are also Swift messages important for the reconciliation and so on. So it's quite fragmented, the landscape. And on the right hand side, you can see with the DLT, there is a possibility to deploy the security as tokens on a blockchain, and it could make the settlement cycle more efficient, and also real-time settlement possible for delivery versus payment. But the asset side is only one leg, for example, for the financial asset. But for the payment leg, it's also important that you have also a currency, either a central bank digital currency or a stable coin for the settlement leg to realize the delivery versus payment. But and also it's advantage for all the participants for the reconciliation, because there is no need for reconciliation because all of them has access to the same data. But there are some, even the DLT could raise efficiency and advantages for the settlement cycle. There are still some questions regarding the technology. Is first of all the scalability, because in case for mass transactions, is it also possible to settle it real time without problems on a DLT technology at the moment? And also it is important that there will be new roles will occur, new intermediaries maybe could occur to meet the regulations. And also very important is there are not only one DLT technology or one blockchain. There are different blockchains at the moment occurring, public and private and so on, and they need to interoperate. So there will be, in that case, there could be fragmentation again. So because the idea of the DLT is to reduce the system breaks and to reduce the system fragmentation. But if we have too many blockchains or type of blockchains or DLT, there could be new fragmentation again. So this is also a big question that need to be answered. And of course, the data privacy is an important point regarding the public blockchain especially. And there also could be new risks that we might meet in case of production. In case of we going in a production phase on DLT, there could be new risks that we may occur first when we go in production phase. So before, when I say for the settlement leg, we need a stable coin or a CBDC. Regarding the CBDC, there are two types of CBDC at the moment. First of them is the retail one. This is the digital euro project of the ECB at the moment is focusing on the retail side. And the retail side is the digital euro. This is the for private or for consumer use, especially for not for institutional. So the digital euro should be equivalent to the legal tender or cash, and it should complement and not replacing the cash. And it should also costless access for the citizens for their digital payment. But this is the retail side that I must say I'm not involved in this project. For me, is this more the wholesale side for institutional use, especially for settlement of securities. And at the moment, we have target services, so we have wholesale CBDC already because this is the target system. But what the important or interesting for researching is on the wholesale side is the 24/7 availability and to put the wholesale CBDC on a DLT infrastructure. These are the 2 points that are interesting for the wholesale CBDC. So for our project, a short overview is in our project, we are for us in the first phases, we created a prototyping to simulate the settlement cycle of digital asset with a wholesale euro on a blockchain with national stakeholders. And in that I must point out, this is only a national project with national stakeholders at the moment. So what are the goals? The goals of the project are, of course, we need to practice the new technology, because on a theoretical side, I think it's not enough. What we need is we need practical know-how. We need practical knowledge with this technology regarding settlement of assets. And it's also important that we have a team in Austria then working together to exchange the topic regarding digital assets and wholesale CBDC. So we have in our project 3 different streams. I will come into detail later. And also important is in our project, we also invite guest speakers from different countries for regarding digital assets and CBDC. And so what we simulating is also to find out how does it really minimize the risk and the potential cost for the delivery versus payment or free of payment settlement cycle with this new technology in real time, and what kind of new risk could occur in that case, what kind of new challenges we could have. And the stakeholders of this project are 2 private commercial banks, the Raiffeisen Bank, Erste Group, and also a participant is the Austrian Central Security Depository, the ÖKB CSD, and the DELPHI is the Austrian Treasury, which provide us with the data for the government bond, which we simulate on the blockchain. And for the infrastructures, we have in the National Bank Innovation Lab, and within the Innovation Lab, we have a team for creating and making experiments on a practical side for this technology. And at the moment, we have finished the first phase, and in June, and now we are starting the second phase with more details on this project. And as I mentioned before, the project is separated in 3 different streams. The first, we started with a technology stream. This is under our coordination of the Austrian National Bank. So, and we created together a prototype for both, for the digital asset, for the government bond, and for the payment for the wholesale CBDC. And after that, it is also important we find out that the technology alone is not enough. We need also look at the legal side. So we also look at the law, the Austrian law. Does it meet the centralized technology at the moment? We have different aspects we look at the moment, from the property law to settlement finality and financial security law and so on. That it has different aspects regarding this technology, and we are still in a phase that we are looking in more. We need more investigation regarding the legal side. And after that, there is a new stream occurred. This is called the business stream, but this is under the coordination of the ÖKB CSD. That the results we get from the technology and from the legal side, they will go to the business stream, and it's looking together with the commercial banks to develop a possible business model for the asset side, not for the payment side, just for the asset side. Yes, and the timeline is we started the project last year in October, and we have a very small team first, because this is important for us to move forward instead of having a big group. So it was really helpful to have a small group, because we could move very fast and complete different steps and milestones. Finally, in June, we could complete the first phase with the prototype for different tests. And in the beginning of the year, we are starting with the second phase for further investigations. And how does it look like? The next phase of the project is we also need to simulate new digital assets like non-fungible tokens or DeFi. These are assets and they are occurring at the market at the moment. And this is also important for us as a national bank to look at it from the technical view, also from the legal view. And of course, we need more legal workshops because it's a very huge topic regarding the legal. And also important, we have to analyze the business model together with the other participants. But this is more for us as a ONB, more participant. It is more the driver by the commercial banks and the ÖKB CSD. So this is from a short overview of the project. So when you have questions and more details, you can contact me directly. No, thank you, Jonas.
Perfect. Thank you very much, Johannes, for this very interesting presentation on the project you have run about wholesale CBDC. So thank you very much. And I would now, I mean, we have 10 minutes time more for the panel, which is of course nice because then we can have an even deeper discussion. So yeah, let's maybe first start with really introducing all of you properly. I mean, Johannes, you already have presented. Besides Johannes, we have Mathieu Arbor with us, who is Central Bank Digital Currency Experimentation Manager for the Banque de France. And then we are really pleased to have Simon Seiter, who's Head of Digital Assets at Haug and Aufhäuser. And last but not least, we have Maximilian Foster, who is co-founder and chief business officer at Cash on Ledger. So really, really happy to have you all, and thank you very much for joining our event. So to kick off the panel, we have kind of separated the questions into two main blocks. So the first one is really more focusing on the digital asset dimension, and the second one is then focusing more on the payment rail and how assets and payments can be brought together. And what we see today is that digital assets are, of course, more and more digitized, but not that, also more and more brought to decentralized infrastructures, such as blockchains, right? So, for example, in Germany, we do see that there is now a regulatory framework that allows blockchain-based financial assets. And here to start, I would ask you the question, maybe to ask you, Simon, first. We have heard from Johannes that there are some good reasons for using blockchains in the context of financial assets, right? So be it like more efficient settlement, that you don't have this system breaks when you go into different payment infrastructures. But besides that, what would you think, would you say are the main advantages of using a DLT for digital assets?
I think the main advantage is actually that you do a general step forward in terms of the technology from moving from digital processes to digital products. And what this enables are completely new business models that we partially cannot foresee yet. So if you have asked, like, what is the advantage of the internet while writing emails compared to letters back in the beginning of 90s, people would have said you can send it faster and cheaper. And we have here similar argumentation, I think, on the DLT side. People would say today, how would you treat digital securities compared to regular securities? They are faster and cheaper. It's basically the very same argumentation. And it's true, by the way. And even that would justify to go into the direction of distributed systems for capital markets. However, the true benefit of the technology comes with enabling completely new business models. And we lack currently the creativity, I guess, to anticipate what kind of models there might come. I personally have some ideas. Think of really securitizing the need for refinancing the production of a single car based on the data that you have in a data warehouse, for example. The data is already there. You just have to leverage it. Thereby, you're closing the gap between refinancing and financing to literally zero, reducing risk, increasing efficiency, and making possible to really bring an individual production of a car as a debt product to the capital market. It might be a stupid vision, but it's just one idea to show in which direction we can run. And this is only possible due to the product being digital, not the process being digital. And what is kind of interesting, I guess, is that we see that we move more into the direction of processes than if we use these digital assets, similar to when we used to transfer physical really securities, and not just digital accounts of physical securities, but just in a much more efficient way. So if you look at, again, business models on the internet, like Twitter is really like shouting short messages at each other. If you see especially like long Twitter threads, this is a communication that you used to have more in person, that you wouldn't have done via a letter or an email. Yeah, and digitization of the letter went to the email basically, but the whole potential was then ultimately WhatsApp, Twitter, whatsoever, with a completely new style and way of communicating. And I guess it will be similar in the financial landscape and maybe even beyond with digital assets.
That's really interesting what you're saying, Simon. So that it's, of course, not just efficiency gains and risk, which is definitely a key component, and I think also drives central banks, but that it's also like envisioning, and I really like the example you made, Simon, with like the letter and the email, right, to also enable novel business models. Some of them we know today, right, but some of them we do not even know today because they are just so revolutionary. So maybe Mathieu, you were also working on this related topic, right, and digital assets. Do you think, do you have anything to add here, or do you think this were the main aspects for why assets could or should be issued on DLTs?
Thank you, Jonas, and I'm really happy that we all on that panel. I think it's a very trendy topic, and everybody's talking about CBDCs and digitization of assets. So I would say from my point of view, I would look at it from two different angles. One is a financial asset being a security, and the other one is financial assets as being a currency. So if you look at securities or bonds, we see one of the advantages of the DLT as being a potential unique golden source. That would improve the efficiency and the functioning of the financial markets, and this has been highlighted by Johannes in his presentation. It would remove or at least shorten the reconciliation process, and it could also offer a marketplace for non-listed assets, for example, and that goes probably more towards what Simon was saying. We saw also as part of the experiments that we did at Banque de France that it could contribute to reshaping some of the aspects of the markets, notably in the fund industry, where we have asset managers who could be in a position to monitor the retrocession fees and skip some of the intermediaries. So we know that there are many intermediaries, and we know that the DLT is definitely there to facilitate the removal of some of the low value added or no value added participants in the market. So we've seen that the financial industry places very high hopes in this technology, basically to strengthen the life cycle of an asset from the issuance to its maturity, and remove potentially operational risk and costs. And I'm thinking essentially of the corporate action space, where by typing the comma at the wrong space, you can create financial losses which can be quite significant, either for the issuer or for the beneficiary. So corporate action is definitely an area of improvement. On a more down-to-earth side, I would say that digitalization of assets can give access to the man on the street to some assets that currently were the privilege of some of the wealthy people who can use the services of a private bank or an asset manager. So there is an element of financial inclusion in the development of DLT and digitization of assets. And I think this is even more true for currencies, and this is the second type of asset that I wanted to talk about. And I'm thinking about cross-border and cross-currency payments. I think every other day now you have a webinar on that topic, or a firm offering enhanced payment services. So it's huge scrutiny. And we've seen the inefficiencies, and we know of the inefficiencies once again because of the number of intermediaries that can that interact in those cross-border payments, as well as the huge costs that are borne by the ones who are actually most in need, because we know that it's people sending money back to their home countries, and they experience fees north of 6 to 8%, which is massive, sometimes even closer to 10% of the nominal amount going in the pocket of some firms who manage that process today. So the DLT based technology, we know, and we've experienced it in some of the experiments that we ran at Banque de France, can facilitate cross-border payments by significantly reducing the number of intermediaries and also waiving the cost. So for us, 4 big advantages: financial inclusion, efficiencies, security, and cost reduction.
Thank you, Mathieu, for sharing these insights. I think this really building on what Simon said, this is really a tremendous amount. And maybe another anecdote to date, I just sent actually one euro to South Africa, which was just for trying purposes, and it's really not representative, so I will mention that. But I wanted to send 1 euro, then I had 1 euro fees. And at the bank of my counterparty, 99 cents was the fee. So I paid 2 euro, and in the end it was 1 cent. So of course I know this is not representative at all, but today I really struggled with these cross-border payments.
You see, that's 99% of fees then, so there are efficiencies available.
For sure. Yeah, but this just on the side. So maybe turning to you, Max, next. What I would like to focus on now is the digitalization and decentralization we just discussed is really ongoing in lots of countries. And I mean, I mainly see this in Germany, and maybe also getting your view, Max, what do you think about these kind of digitalization and decentralization of financial assets in Germany? Do you think like this is heavily ongoing? Do you think we are just beginning, or what's your kind of feeling of the momentum that's currently going on when decentralizing kind of or tokenizing financial assets?
Well, thanks a lot for the question, Jonas. I know you were brought on the topic, because ultimately what we see currently in industry is like a convergence between the industry itself and financial services. So both of them are coming more and more closely together. Why is that? Ultimately, because we create a lot of data. Like if you think about normal assets, just as vehicles or tractors or anything which is actually out there, like as mechanical engineering companies, like even having machines, like they produce tons of data, like zettabytes of data is out there. And what ultimately happens is that most of the companies start to ask themselves the question, what do we actually do with the data? Like how can we actually transform this data into financial streams? And how do we actually create out of this whole IoT data, ultimately financial streams on the one hand side, which is payments. So you get actually like money out of the machines directly. And on the other hand side, obviously also like about the refinancing topic. So what we create currently, and like what the whole cryptocurrency topic started in 2017 with Bitcoin, is actually like the need for a new financial asset and digital asset classes, where you also have like just commodity goods, as for example, a tractor or a machine, a mechanical engineering company just producing an asset, like all of these assets basically becoming digital, getting a digital twin, a financial digital twin. So transform these assets from a real asset to a financial asset, and then make it investable. And this is like basically what we currently see in the whole industry, because everybody's shaping around new business models. Why? Because the customer just simply asks for it. If you think about like car sharing examples, like this is the best example we see in the last years, where you can actually see that people are not willing to invest 30,000 euros into an asset like a car, but they rather want to invest into mobility. So they want to have the function of the asset instead of the asset itself. And that actually like has a vast impact on how you actually think about financial services. Because ultimately, if the car is not sold anymore, you don't have this one-off payment, you don't have the classical credit and loan structure, but what you rather have is a reshaping of the whole financial value chain. And with that, you basically create an entirely new kind of like asset class. And this is what we currently see, like, across industries. So it's not only mechanical engineering, it's also medtech companies thinking about these processes because they're heavily expensive, as well as classic mechanical engineering companies. And we particularly see that in Europe because we are asset heavy strong. We have a lot of OEMs, which are particularly sitting in Europe. And with that, basis, like there's a lot of momentum currently going on. And like pay-per-use business models, asset as a service business models, all of them are on a rise. And you see on a daily basis more and more like notifications coming up, like ultimately where you have people thinking about, hey, how can we actually reshape the classical distribution process of our machines? What comes next is ultimately we also need to think about like tokenization as a technology. So we need to have like smart assets in the very beginning. So we need to fetch the data, we need to analyze the data, and also think about in classical structures such as special purpose vehicles and all the legal basis, regulatory compliant basis, to then ultimately use tokenization as one of the means how you can actually transfer it more easy, more secure, just heard all the arguments between two parties and create a peer-to-peer place. But ultimately, you also need to think about like how do you actually legally make these assets investable and actually tradable. And I think what differs here in regards to regulation, particularly in Germany, is that there is a foundation set, and we have like we have basically more assets right now being available, and going to shed some light on that later on with the STOs, which are again possible with the crypto custody law, or even like the electronic securities, which can be issued for bearer bonds or even like registered bonds. But ultimately, like we have like at least in Germany, like at least a regulatory framework around that you can actually issue these assets in the first place. But nevertheless, you need to think about to take step by step. And the first step is to basically take the data from all of the machines and transform these data into financial data that actually provide the basis for later on like more efficient trading structures with the DLT. But ultimately, like in the first place, that you actually like create digital assets in that sense, and digital assets like make real assets, transform them into financial assets.
Thank Max, and maybe a similar question to you, Johannes. What do you think from an Austrian perspective? So where are you in the cycle of decentralizing financial assets, and maybe also building on like the second question? I think you analyzed this also in your DELPHI project, but how's the legal situation? So is it as clear as it seems to be in Germany, or is it a different situation in Austria?
In Austria, from our point of view, it's not so clear at the moment. So we are still on, it's an ongoing process, but what we can see, there were a lot of companies, startups working on that already and with their products and ideas. So, but I think from the legal side, it will need more investigations. But I think it's in Germany and other countries, they are further, or Switzerland, well, comparing the German spoken countries, or Liechtenstein. I think Austria, we are not so far at the moment. It's my point of view.
Yeah, maybe Mathieu, to compare this to the French situation, what do you think how this is in France?
There aren't many areas where France is ahead of the others, but here I have a couple. First of all, we started dematerialization of assets and securities back in the 1980s, so almost 40 years ago. Most of the financial markets in France were dematerialized. And for this reason, there is a feeling, I would say, that we are already digitalized in a way, but it doesn't stop the market and the investment community from strongly looking into it. So we've spoken to wealth managers, asset managers, custodians, and the appetite definitely is there. And it goes way beyond curiosity, and we see initiatives popping up everywhere. So we believe that digitalization is here to stay, and also decentralized finance. When you look at the total load value, it's grown fivefold just in the last 12 months. So it's a no-brainer to believe that it will carry on, keep on growing. And now we see a situation where the offer for services is now finding the demand as well. So the interest of the market, the interest of the individual, they are matching. So we see very strong growth of independent or backed firms like Isness, Liquidshare, or SG Forge in France, and these are firms that partnered with Banque de France in the experiment to highlight the benefits of digital assets as well as a wholesale CBDC. Now, the second area where France was probably ahead is in terms of legal framework, because back in 2019, France was one of the first countries to implement a legal framework with the Loi Pacte, the Pacte legislation, which covers providers of crypto asset services as well as people who offer exchanges or wallets, but also initial coin offering. And in a nutshell, legislation requires that those providers register with the French regulator and are approved by the French regulator with a specific focus on AML, so anti-money laundering, and financing of terrorist activities as well. So the legal framework, I would say, is in infancy. No later than on Tuesday, I think we had in the French newspaper Les Echos an interview of the ECB Vice President Luis de Guindos, who highlighted concerns around crypto assets, notably in the field of terrorist activities financing and tax evasion. So it's definitely a focus for central banks and regulators at the moment. And I think everybody knows that at a European level, the Market in Crypto Active Directive, MiCA, is currently being discussed. There was hopes that it would come into force in 2021. It now looks more like a 2022 initiative, and it will supersede the local legislations. It's one of the most advanced regulatory framework when you compare it with what's happening in the US, in the UK, or China, for instance. I don't know whether we can compare Europe with China, but and it will also cover crypto assets issuers and service providers. So, and without entering into too much detail, basically, it will establish that MiFID applies to financial assets and financial instruments that are issued on a DLT, and it will distinguish three types of assets. We have the asset reference tokens, electronic money tokens, and other crypto assets such as the utility tokens. So it's quite comprehensive, and once again, I think probably one of the most advanced regulatory and legal framework. But
it's really
to Johannes' point, sorry, it's true that legal considerations are still high on the agenda, and we operate almost by the day. So new considerations come into force as we progress in those projects. So it's a moving target and a moving landscape.
Yeah, but Johannes, want to comment?
May I just comment? Thank you much. So I think it's also important to point out the MiCA is that security tokens, as far as I know, is not regulated in the MiCA, I think, at the moment. Security token, I think. It's only, I think, utility token, payment token. And
the dividing line is simple. The dividing line is the MiFID II definition of financial instrument. Yeah. Everything that MiFID II financial instrument is not within MiCA, but within the DLT regulation on distributed market infrastructure. Yeah, and everything what is not a MiFID instrument is within MiCA, and of course every MiFID instrument is also MiFID, to state the obvious. So you can also make MiFID compliant DLT securities, by the way. The issue with the term security token, as I would guess, is that some of them were exactly made, like tailored in a way that they do not fall under at least some national definitions of security law. Or even in Germany, for example, you have 4, I guess, unharmonized definitions of a security, depending on which kind of law you're looking at. And so there were some security tokens that were falling like within one perspective, legal perspective, under the security, and within another, they didn't. Yeah, this was exactly the case with the so-called German Schuldverschreibung. And this is, of course, a financial product that's made to be targeted to a gray space. And I would say with MiCA, as a like of bucket regulation, everything falling inside, and if not, then going the other direction, you eliminate these gray spaces. Similarly, in Germany, for example, with the German Act on Electronic Securities. And for that reason, I would say it depends on how the security token is being made, but the buckets can be divided by the line of MiFID II definition of financial instrument.
But what's really interesting, what we see, also Simon, Johannes, and Mathieu, is that, I mean, there are, of course, legal questions, but it emerges quite quickly, right? So that we see where uncertainty is kind of decreasing across the bench, basically. And also we see that more and more companies adopt this, right? So maybe also to having like the last questions around these digital assets block before we, of course, also turn to the digital euro. And maybe, again, handing over to you, Simon, and afterwards maybe Max, which other assets would you like kind of bring bring on a DLT. So we talked about the advantages of why it can make sense to use a DLT for digital and financial assets. But which assets do you think are like most, most obvious, I would say, from a benefit perspective to bring on a DLT?
I mean, already having started with the explanation, like what I think what we have been seeing is like this run-up curve. Where you started with cryptocurrencies, like first form of digital investments, then later on going on about NFTs. I think everybody knows right now about the non-fungible tokens and the crazy market which is currently evolving. And what we see as the third stage is just like commodity goods being like digitized in a sense. What is always important is, as what I was just outlining, is that you first of all make the assets smart, but ultimately like in a later stage, like basically every asset which can be digitized in a form that you actually can retrieve data in any kind of form from this asset itself. You can basically link to financial transactions, and ultimately you can make it to you can transform it into a financial asset. So what I want to say with that is I wouldn't even like kind of try to nail it down to the several industries, because I would say even like any asset which is going to be produced like in hardware form, so which is in real asset, like a vehicle, like a machine, or like a medtech product in any sense, can be ultimately like digitized in the first sense. So you basically get the data, fetch the data from it, then basically create payments out of it. So if somebody's using it, pay-per-use, for example, you can do ultimately payments with it, and then you transform it with that historical data, which you just basically get per asset. You can then transform it into like a more transparent asset, a financial asset in that sense, and make it investable ultimately. Because what you do is you mitigate the risk on an even better basis than what you have today. Because if you compare it to normal leasing models, like if you have like a car leaving the space and like leaving the leasing company, you ultimately don't know what happens. And after a certain amount of time, like let's say 5 years, it comes back and you have no idea what happened to it. Like with the data transparency, you actually know exactly what you have earned, what it cost, and basically what is the residual value of this asset. And with that information, you basically have the baseline, just mentioning the baseline of like a financial product, and then you can go more into depth. And obviously, the more data you have, the more advanced you can actually like go with the securitization. And then obviously like you can basically make any asset digital. And then you can also think about like what we just have been discussing. How do you actually like from a technology perspective send the asset from point A to point B? And that's like then the discussion where DLTs make more than sense, and we should actually like then experience like digital assets or see digital assets on a DLT infrastructure.
Thanks, Max, and maybe also to you as Simon, because you're also kind of very deep into this digital asset space for quite some years. What do you think, maybe besides the financial context, and what do you think is like the next step of tokenization? Like which assets to put on the chain next?
I don't know which assets, to be honest. I think the next step is further lifecycle management, to be honest. Because currently we are only talking at largest extent of investment opportunities. Where I personally would say interesting, of course, but we will very often fall into that bucket of securities if we're talking about transferring ownership in whatever kind of medium, because that's the purpose of security ultimately. So if you're not transferring the asset itself, right? For an NFT, this could be really different, by the way, because the NFT is actually the asset. So that's like delivering a package rather than sending a security. For a token that represents pieces of art, even though they seem to be non-fungible, like faking it while doing tokenizing pixels or whatsoever, this is not really like sending the picture. The NFT can really be sent directly. The true NFT, the tokenization of physical assets, is for me very close to securitization. And what do I mean with lifecycle management? I mean, if you start reproducing truly digital assets, and this is then beyond art or game tokens or whatsoever, but really assets that are currently living in a digital environment already, or an electronic environment, like a bill. Yeah, producing a bill as a digital asset on the blockchain, providing it with a life cycle, you can really trigger events like being paid. If not, then you go into the process of telling the people to pay. Yeah. That whole stuff is being done currently at large extent manually, which is incredible if you think about it. Yeah, and this is only as well one example that I can give, not many others, which I lack personally the creativity to express them. But just looking from that direction, I mean, this managing the life cycle of these financial assets that are already there in the market that could be digitized, and then even further other assets that are already kind of electronic or digital, this will really decrease manual processes extensively, especially if you look at what currently, how many people and organizations are still managing the synchronization of information within one or even across many institutions. The DLT in general has the ability, like the internet in general had the ability to do a lot, even though we didn't even yet discover full potential. Yeah, but similarly, the DLT has the potential, of course, to reduce these efforts. Yeah, where information synchronization and exchange beyond organization is already being done by people today. What this will lead to is, to be fair, that these jobs will not be there anymore. So we have to think about what kind of purpose and work we can provide there. Yeah, but I mean, we know already to some extent that these jobs are in some way not really jobs that need the highest here analytical powers. Yeah, if you, for example, scan bills, yeah, that is something that's not really that extensively analytical. Yeah, and these tasks and the lifecycle management that the people currently do, like putting it into an SAP system and stuff like that, but Max can tell here much more than me. This is something that, out of my perspective, is the next step of the development.
Thanks, Simon. Yeah, I think this kind of automation you also explained was really also something which is really, really important in this context of blockchain-based assets. So we really talked about like efficiency gains and risk mitigation, right? New use cases, and also then these automation you just described, Simon. So I think this is really a really good kind of a summary on this first block. So now turning to the digital euro, because I think this is also what is very important, not just have like the asset leg kind of on chain, then also like to have the cash leg, so the payment on chain. And here I would like to start with the first question to you, Johannes, again. Like, how does a blockchain, I mean, you kind of addressed this like roughly in your presentation, but how does a blockchain-based kind of digital euro, I mean, assuming now we label this digital euro, right? Even if you explain in the presentation, this is not what the ECB talks about. So like a wholesale DLT-based euro, let's maybe call it like that. How does it support the digitization of financial assets? And also, is like such a blockchain-based euro like necessary for the future of the settlement of digital assets?
So in that case, what we did is we have on one hand the asset itself on the chain, and we have also the wholesale CBDC token on the same chain, because it should be on the same platform, so we don't have system breaks. And the second question is, is it necessary? I would answer, is it more necessary to make the settlement cycle more efficient? If we really need the wholesale CBDC, I think this question is difficult to answer, because at the moment we have so many national banks in the world experimenting with the CBDC for wholesale or retail. And still, I think there are also some national banks, they are using alternative technology using that. So I think it's quite early to say. Of course, I must admit that with CBDC, we can gain efficiency, but it's also to see, is there also alternative methods for that, also to compare it, yeah? And also the costs and what the new risk could occur. So I would say necessary is more to make the settlement cycle more efficient is more necessary, but independently of the technology or a CBDC, I think. So this is my opinion.
Yeah, thanks Johannes for sharing the insight. Maybe again to you, Mathieu, what are the insights from like kind of the projects you were also involved with? Yeah,
we ran and we're still running some experiments at Banque de France. So 7 are fully completed, and it's true that the point was quite similar to what happened in the Austrian Central Banks. The idea was to use central bank digital currency in order to settle financial transactions of digital assets as well. So I was going to conclude this point by saying, if it's not broken, don't fix it. And it's true that the financial markets today are working well. They are strong platforms, strong infrastructures, and sometimes, you hear people say that the DLT is trying to find a problem, is a solution looking for a problem. Now, things are happening, right? The digitalization of financial assets is happening, and the conversation that we had with market participants, which were banks, central banks, custodians, asset managers, asset owners, they all indicate and strongly push for a cash payment asset on the ledger to settle the security side of the transaction, which is also on the ledger, and notably to benefit from smart contract programmability, for example. And to go back to what Johannes was saying, it's true that the idea that it would create a coherent but essentially efficient ecosystem of digital assets. So with respect to the case for a digital euro, we hear a lot about stable coins as well, and it's seen as an option, I would say, in the absence of the existence of a CBDC, but they are considered to be suboptimal and more risky. I think there is sufficient literature in the market at the moment around the Tether to be concerned with the systematic risk that such a so-called stable coin could create, and I would say, in addition, the wide and wild as well dissemination of crypto assets as means of payment and settlement could challenge the monetary stability, monetary sovereignty of central banks, and ultimately the financial stability as well. I think this hence supports the rationale for a CBDC issued by a central bank, which would complement, and it was also highlighted by Johannes in his presentation of the DELPHI project, it complements the existing form of central bank money, which exists today in Target 2. So I think there is a business case, there is demand in the market, but it will have to coexist indeed with existing infrastructures which today operate well and support the good functioning of financial markets.
Thanks, Mathieu. I think you really talked about very important aspects as well, right? You mentioned stablecoins and you also mentioned programmability. So of course, there are also other advantages of like bringing the asset and the cash like kind of on chain besides this settlement thing, but more also the programmability thing also Simon talked about when he talked about automation. So here maybe turning again to Simon and afterwards again to Max. Simon, what would you think? Like if we just see that there is kind of a need for such a, let's call it blockchain-based euro somehow, right? And do you think that this is something the central bank should provide? So meaning, for example, wholesale CBDC, what Johannes and Mathieu explained, or do you think that it would also be sufficient if we see some private sector institutions issuing this? So this could of course be stable coins. This could be bringing commercial bank money on chain, right? This could be e-money on chain. What would you think here? Who should take the lead, kind of?
Difficult question indeed. I think everybody should take the lead. Yeah, that's something that people rarely do. The smart follower isn't that smart at all. I personally think that there is a huge, and saying this currently again, coming from private bank, where now it could be my task actually, sometimes not so easy, depending on what your current business is. But I personally think that private banks are in a very good position to issue digital euro themselves. And I've personally done this, already signed off internally 2018 at Commerzbank and used in the first transaction in 2019, beginning of 2019, with a security transaction where we issued a private bank, like a commercial bank, digital euro, and we used it then afterwards for several projects, for a settlement of a security, for the payment of an electronic truck, and for the payment and execution of exchanging bills and bookings between chemical companies. So we already showed, of course, in a test stage, but really productive and live, and with the banking license of Commerzbank at risk, that it's possible for a private bank to issue commercial bank digital euros, basically. The question, of course, here is, how do you receive then interoperability between the banks? So what we do lack is something like a network that we have for the current electronic commercial bank money. So customer doesn't see that he's owning as a Commerce Bank client, Commerce Bank account money. And if he's transferring it to Deutsche Bank, then he doesn't see that actually Deutsche Bank and Commerce Bank in the background exchanged basically their commercial bank money with each other. They just see the euro. Similarly, we do need a digital euro and then not a Commerce Bank euro, Deutsche Bank euro whatsoever. So you need a kind of settlement network, similar as you have currently within something like the SEPA network. Yeah, you need something similar for the digital euro. But in fact, I mean, 80% of the people's money transfers are taking place in commercial bank money. So I would in general assume, of course, one could argue that a digital euro that is like a more privately used digital euro, like a cash replacement, could be used more often and thereby increasing the percentage of cash being used actually. But in general, I think the commercial bank money will be the predominant way of payment, even in the digital world. And so you could basically put 80% of the cash management on a digital platform without the central bank moving at all. However, of course, the clients, the banks being clients of the central bank, a network similarly at the central bank as currently also is, with Target 2, for example, that is living on a DLT, could leverage extensively the exchange of individual commercial bank money between the different commercial banks. And for that reason, even though it only is a smaller portion of the cash management, central bank digital currencies could be a trigger for commercial bank digital currencies. However, for the commercial banks, it could already be possible to issue them. There's no real obstacle like drawing them back, besides processes and risk.
Thanks, Simon. What we also do see in the private sector, maybe then handing over to you, Max, is that besides like bringing like the euro on chain natively, so via stablecoins, tokenizing commercial bank money, what Simon said, that you could also use a so-called trigger solution, right? So, for example, as the Bundesbank has experimented with this, for example, but also other players, of course, so that you kind of link currently existing payment systems with DLTs, right? So that are kind of synchronized, or that they at least kind of trigger, that's why it's called trigger solution, trigger some payments or that are triggered on chain are then executed with conventional payment methods. Maybe here the question to you, Max, what do you think about such trigger solutions? Do they really like solve the problems that we currently have and that blockchain could fix in this context, or would you prefer other solutions here?
Well, thanks for the question, Jonas. Like to start off with, again, like, between the CBDC discussion and programmatic payment flows, I would also see it the same way as Simon does. So basically what you have here is like, I think, two different design principles which needed to be followed. Like a central bank digital currency has utterly different design principles which they need to follow than like programmatic payment streams from commercial bank monies. So ultimately, this is like two kinds of different systems, I would even say, like who can build simultaneously or like sequentially, but do not depend on each other. So I see actually like, these two streams where you have like on the one hand side CBDC, and then on the other hand side, you basically have a programmable payment variant of commercial bank money in that sense. So if you have a look at like more the commercial bank money side, like what options do we have? You basically have the option of like putting the euro there and like just create like, euro on chain and then like, transfer it between the different banks. Or we have, like, as you just outlined, the solution of trigger solutions of programmatic payment streams. And for that very reason, I think what is essential here is that you actually have like standardization and fungibility between the banks, as you just outlined, because ultimately, like commercial banks are there for like, providing a solution for the industry and for private markets. So this should not be a task of central banks and public authorities. It should rather be like a task for private banks themselves. And trigger solutions can and will be a very, very good way in experiencing with the technology ultimately, because what you do is like you link the old system, like the old payment gateways, and you just have normal settlements in euro with a new blockchain technology. And with that, you basically create first experiences in that. And later on, you can actually decide like how you will actually deploy these systems and how you will actually use basically the different programmatic schemes and how you actually implement it. Why do I say it? If you come from industry perspective and to share a little bit or to shed a little bit of light on like where the industry currently stands, is if you think about the process, Simon also just outlined with the ERP systems, invoicing, billing, this is all topics you need to take care of. Because if you think about the asset, let's take a tractor, for example, and you have this tractor and you want to like pay per use this tractor. So you want to lend it out and pay per use the bills back basically, and like, have a settlement ultimately. What needs to happen is that you retrieve the IoT data, transform this IoT data in payment streams. So you ultimately know who owns what. So basically that like a user of this tractor, so a farmer owes, for example, the OEM 50 euros. So he created a bill. This bill must be regulatory compliant as an invoice. Ultimately, also this bill must be integrated in ERP systems because you don't want to like change the whole ERP infrastructure. You basically want to have an external system, which is then just implemented. So this small step, which I just explained, is utterly complicated because like they have different functions, like there's different ways and different like, IoT data, which you can just like basically deploy there. And then what happens is once you created this bill and everything else, like, is systemly, is in the system integrated, everything's fine. Then you start thinking about payments. What you currently have is like the EBIX payments, particularly for commercial banks and like for commercial business accounts in that sense. So you have an EBIX interface, which you can just like onboard and then you can send money from point A to point B, which is very manual in a sense. So you need to have an automation here. So you have first like new concepts, request to pay by November 2022, which is actually like, first kind of step towards automation. But the ultimate point is here that you also need to think about other like directly automated payment flows here. And if you think this use case further, think about the tractor again, you have a third party being involved in the same system. So you basically have a tractor user, he has a flat tire, and you have an insurance company insuring exactly that use case. So ultimately you create a liability from the insurance company towards the owner, so the OEM, as well as the user. So you need to have like a shift in the payment scheme. So you need to have the programmatic payment scheme not only one direction, we have the user paying for the tractor all the time, but they also need to go vice versa. We have like an insurance company paying the OEM and paying like the user of the tractor. And for that reasons, like this is very manual process currently. So you basically need to write emails and basically then send the money back. And you might even need some insurance people like checking if the tractor really has a flat tire. Ultimately, if you can put that data on a blockchain and like, start thinking about, hey, we have a smart contract triggering exactly that function that there's a flat tire. And with that flat tire, you need to like shift the payment stream from the insurance company then to the OEM and the user. With that, like, execution and like event, which is triggering, you can then ultimately think about programmatic payment streams. What you need there in the first instance is, as you just outlined, a trigger solution, because ultimately everybody wants to see euros basically being transferred between the bank accounts. If they're later on replaced with a euro, which is executed on a DLT, which the end consumer doesn't see, is basically something which can be discussed, which also needs to be like looked at, but once we arrive at this stage. So that's why I'm saying trigger solutions are a very good first step in taking these experiences and gathering experiences for private banks in order to know what the industry actually needs. Because nobody like is helped in a sense that if you just build like commercial bank euro and then transfer between point A and point B, if there is no use case which is actually like supporting the whole concept of this of the programmable euro in that sense on commercial bank money level. So with that explanation, I hope it made clear that you need to like focus also on industrial needs on that end, and you actually see is there viable use cases out there who can actually then also use the programmable euro. Otherwise, you just created like a new financial instrument which will never be used and which ultimately doesn't bring any kind of like a value to the existing payment infrastructure.
Thank you, Max, for sharing your insights here. And maybe as a last question to all of you before we go into the Q&A, I mean, time really flies. Maybe I would ask you to really respond quick, so maybe 30 seconds. And this is, I would say, like a little bit a view or an outlook into the future. So what do you think, where are we in 5 years when it comes to the euro on a blockchain? So do you think we might see some kind of a wholesale CBDC? We have great euro stable coins. We have banks that have brought this on chain, or maybe nothing because it will be the US dollar or the Chinese currency. I would be very curious. So what, maybe to each of you, starting with you, Mathieu, for example, what do you think, where do we stand in 5 years regarding a blockchain-based euro generally? Maybe also independently from the retail CBDC the ECB discussed.
Well, I think hopefully I will give the same answer as Johannes, because we both work for central banks. So I think the agenda has been set quite clearly by the ECB back on the 14th of July when they announced the launch of the investigation phase for the digital euro, which is primarily focusing on retail usage. Now, I think that there is €1, whether it's retail wholesale, but the focus today is on the retail side. Obviously, at Banque de France, we've been working on experiments to demonstrate the benefits of a wholesale Euro CBDC as well, and we hope that this will be given further consideration as well.
Thanks, Matthew. Maybe continuing with Johannes.
Yeah, thank you. So as I say, also for me, so in my department, we are focusing on the wholesale side. So we also hope that we will get more progress on this side. But in 5 years, it is quite difficult to say, because maybe in some years there may be some new technology will occur, or it depends. So I think it's really hard to say where we are in 5 years. I hope we will get more progress in this context.
Simon, what do you think?
In 5 years, we will have 40% of the general cash flow being managed on a DLT.
That's a really clear answer, and we will definitely talk again in maybe in 4 years, Simon, to see if this is valid.
5.
Yeah, but yeah, okay. Good. Then in 5 years. Thanks.
The
thanks,
last
Simon.
one is important, S-curved adoption, you know?
Yeah. Okay, then not 4, but really 5. Okay, I will mark it in my calendar. Thanks. And maybe last but not least, Max, what do you think?
So basically, I think it's not really like a definable question, in the sense that we actually won't know where we stand in 5 years. The point is, like, you know, from my estimation perspective, it really depends on like how fast the industry is taking it up, and like if we separate between the two streams. So what I definitely see is like the need for a CBDC, in a sense that mustn't directly be deployed on a DLT, but there will be one form which is an interoperable offline availability, and like there's a lot of things which are then taken into account. And there will be, like, you know, the first prototypes out there, definitely, which are actually used, and like used in variety, because like once China is deploying theirs, like, you know, other central banks will follow. From a private sector perspective, it largely depends also on the industry. So if you have, like, you know, large automotive or manufacturing companies like taking care of like focusing on DLT infrastructures, then there will ultimately also be a payment means and, like, you know, a settlement means like on a DLT basis. So it really depends on, like, you know, the convergence, which was the very beginning of my statement, on the convergence of the industry and the financial services, how fast they will actually come together, how fast they will actually create combined products, and how fast they will actually, like, you know, with that transform the industry as we know them today, and obviously, like, you know, even new business models. And with that, like, we'll actually also see, like, you know, new forms of payments and, like, you know, more efficient payment streams, whether it be on a DLT or not.
Perfect. Thank you very much, Max, and also all of you for this insights regarding the last question. We are actually also almost out of time, and I'm happy to go into the Q&A for the next 18 minutes so that we finish on time. So thanks again to all of you for the insights, both from the public and private sector. I really found this very insightful, and I think, and this is also what we at the DEA stand for, to bring public and private sector people to the table, because I mean, this is topics that, I mean, it's like, it should be interesting for all of us, right? And it should not just be one party or the other doing it, but it's definitely a working hand in hand. What I'm now doing, I just share my screen with Slido, and here again to the audience, if you have any questions to our excellent panelists here, please again go to slido.com and insert the code you see on the left side here. Alternatively, you can also scan the QR code and directly appear here when asked to insert a question. So please feel free to do so, and also feel free to upvote the question. Also, some of you did, which is really good, so that we can start with some good questions. But of course, you are encouraged to continuing upvoting this. Right, so the first question goes to you, Johannes, and here the question is, assuming there would be a policy decision to issue a wholesale CBDC, so just assuming this is kind of given, how long would it take to develop a scalable wholesale CBDC and launch it to the market?
Yeah, so this is a very good question, because the technology itself is one side, and it's also important to bring all the participants using it, because we have so many intermediaries or central security depositories, and there are lots of also smaller CSDs also beyond the Europe and in other countries. So bringing together to working on that, I think this step will take longer than the development of the CBDC itself. So I think the technological side is not the challenge. The challenge is how to bring it on a scalable for the using it.
Distribution and adoption. Okay, interesting.
Exactly. Distribution and adoption is more the question, and also for to meet the legals, because we have different countries and also different legals and laws. How to meet it? I think these are more the challenges.
Mm-hmm. Thanks, Johannes. The second question is to all of you, so whoever wants to respond, please feel free. And today we also talked about programmable payments, so which is basically payments triggered, for example, by a smart contract. And here the question is related to programmable money. So the general question is, what do you think about the concept of programmable money as in money with specific spending conditions attached to it? So what's your attitude towards making money programmable so that it can, for example, just be spent for specific purposes, or that, kind of there are specific spending conditions attached to the token and the money itself? Whoever wants to respond to it, please feel free.
I can jump in then, maybe Jonas, from a wholesale perspective, I would say, and based on what we've done at the Banque de France experiments. The central bank's mandate includes obviously not just the issuance of the central bank money, but also making sure that it's used for the right reasons. So we did test some cases where the central bank money was programmable in order to be used, for instance, for a specific purpose, which would be the settlement of a bond, a DVP in financial markets, or a payment versus payment operation as well. So we know that it works. And this is an aspect of programmable money that we've been testing.
Thanks, Mathieu. Anybody something to add, or are you? Should we continue? Okay, great. Let me just continue to the next one. And here again, feel free, like everybody who wants. And this is about DLT and blockchain infrastructure. What about false instructions on DLT or blockchain infrastructures? How can mistakes be solved in a T+2 environment? So basically in immediate settlement.
Yeah, I can take this one because the answer is quite simple. Not at all. That's the whole purpose of the question of the technology. You can do counter booking if you like to. If the other parties disagrees, you're bad. That's the whole purpose of the DLT, that if you do something on purpose, that it's being done. You can, sorry, one aspect, you can try to prevent things like that by implementing processes where more than one person has to justify a transaction. But the transaction itself cannot be undone. That's the whole purpose.
Maybe to add up on that, I think ultimately this is exactly why somebody should think about the trigger solutions again, because this is a way of learning it. Because ultimately, this is problems which will arise, and this is I'm 100% sure this is not the only question, which is regarding in final or atomic execution environment as the DLT environment provides. Ultimately, this is questions which will arise and which we definitely need to answer. Which is why this stepwise approach, particularly in commercial bank money, where the DLT trigger solution could be a potential way of learning how to deal with exactly these events.
And if I can add something from a wholesale perspective again, because this is where the area where we've been experiencing the wholesale and financial markets operate on the basis of matched transactions. So that matching process is meant to carry on, at least for now, and I wouldn't say that there won't be any false instruction, but a false instruction would not match with the unless both parties get it wrong, which is quite unlikely. But that's a way to address it, is by keeping that notion of matching and confirmation.
Thanks, Mathieu, and also for all the insights you just shared. Another question for Johannes is about netting. So what about netting? How did you approach the concept of netting on the DLT?
Yes, but this is for us. Netting is the second step. We are starting next year looking at the netting. We have some concepts with smart contract, and also a step before we have different concepts for addressing netting. Is we're using the smart contract itself, or we can using a step before on a conventional side, and only the transaction itself will be deployed or will be persist on the blockchain. So I think there are different ways how we are planning also to address this topic netting.
Mm-hmm. Thanks. The next one, again, to anybody who wants to respond, maybe I missed it, but is a commercial bank digital coin ultimately not a stable coin? Why differentiate it out from any stable coin? Like rather a definition question. Anybody wants to respond? Otherwise, I'm also happy to take it. Then I just do it. I mean, it always depends on the definition, right? So if it's a stable coin, it's basically in the crypto space just means it's like a coin which has some mechanism to stabilize the price, right? So you could use some backing, for example, backing fiat money in the end. You could also use it by backing gold. We also do have stable coins. They do not have any physical backing or digital backing, but this is more like an algorithmic stable coins where supply is adjusted. So there are lots of different ways. And I think it depends on terminology. What is a stable coin? So normally, or it depends that people differentiate it and say a commercial bank bank money is not a stable coin because it's also not where it initially come from. But there are also people saying that commercial bank money is a stable coin because it's backed with commercial bank money in the end, right? But so this really depends on the definition, I would at least say. Great, so let's proceed to the next one. Again, to everybody, which kind of assets can theoretically be tokenized, processed, transferred on DLT platforms? I think we already talked a little about it, but maybe if you want to add some thoughts on this.
From my side, my personal view, I would say everything that has property transfer can be tokenized. Is financial or energy transfer or energy business or licenses, everything that has the property transfer, I think can be tokenized. Is my personal point of view.
Maybe to add here again, like I think Johannes, you're entirely be right. Like you can almost tokenize everything. I think the question also must lie, like, does it make sense to put it on a DLT, and under which circumstances does it make sense to put it on a DLT? Like, what do you want to ultimately like achieve in like putting an asset in a tokenized form on a DLT? I think this should be the specific question, because ultimately, as outlined before, if you take just normal assets, like let's take a machinery again. Simon already said, and like I'm 100% with him in saying like normally this is just in security, and like the DLT infrastructure just enables you a faster settlement between peer-to-peer trading, in the sense that once you have it like in form of a token, and you already established the security, and then you have a token, you can basically transact it faster between two persons, and that could be a viable case. Could be a viable case. The point here is ultimately that it just really depends on the use case.
But Max, I don't know whether you would agree, but there is no marketplace for new types of assets, new type of digitalized assets, and there is no other marketplace than the DLT, because no financial market would list a brand, a concept, a non-fungible token. So the DLT is the marketplace for these types of new assets.
Well, ultimately, you're right. Like particularly like for NFTs and Bitcoins and like cryptocurrencies in that sense, I was rather thinking about like also about real assets. If you really transform like an asset, like as for example tractor, or like even like a fleet management of tractors, like 30 tractors, and form a security, and then put out of the security you make a token and like transfer this token, and then you ultimately like created a vehicle, and then you can think about like listing places. But ultimately, you're right. I mean, for particularly NFTs and particularly like cryptos itself, like this, you're essentially right.
Perfect, thank you. And another question more from the stablecoin direction. What do you think about a stablecoin with an automatic algorithm, so algorithmic stablecoins, for issue redemption to act as a settlement crypto token? Here again, maybe a question to anybody who wants to respond.
I mean, it optimizes the risk profile, I would say, of the coin to some extent. Because you then basically reduce the time frames where you have a breach, I guess in general the counterparty risk stays. And the question would be who issues that coin and under which jurisdiction.
Thank you, Simon. And yeah, since we have I would say this is the last question, because the only question left with one upvote, which is a very good quality assurance here. So 24/7 with a target 2 system might be a big challenge for the whole market. I wonder if connectivity with tips might be a better approach. What is your view on that? So here again, anybody who wants to respond, please feel free to respond.
Taking that again, I would say yes, there could potentially be a problem. Again, think about where would you need it in that sense. So again, coming from an industry perspective, settlements is not really an issue, because ultimately what you do is you create a bill or an invoice every 2 weeks, or even on a monthly basis. So ultimately a 24/7 settlement process for example, pay-per-use business models is currently not a thing, because you don't need real-time transactions for that. Because ultimately everybody's creating a bill, and 2 weeks or a monthly settlement is enough for that. So the question is when do you want to use it for?
Great. So thank you very much for taking the last question, Max. Yeah, and we are actually also out of time and out of questions as well. So I think this was really good timing. So yeah, now I just really want to thank all of you for Max, Johannes, Simon, and Mathieu for being with us today. I think it was a really, really interesting discussion. Thanks for providing your insights and contributing to the discussion on also blockchain-based kind of forms of the euro, if you will. So thanks again for participating and for taking on and accepting the invitation I just gave. And also thank you, of course, for the audience for joining this event today. I'm really thrilled that you have been interested in this topic. And as we said in the beginning, please feel free to also apply as an expert or a fellow of our community, because as I said, we will soon start working groups in January. So if you want to contribute to this debate and also be in a working group with lots of great experts in this field, please feel free to apply, and we would be thrilled to have you as part of our DR community. And we can also announce that for next year, we will have a lot of events, so probably 10 to 15. So really a lot is going on here also in the space. So we have to do lots of events for sure. So just so follow us on social media. We will post this, of course. And this was kind of the last event for this year. So for the people we are not seeing again on some kind of events or in person, of course, a really nice time before Christmas, and a good, even if it's still a few weeks, a good start into next year. And thanks again to the 4 panelists here. Of course, also the best for you. And thank you very much for joining. It was really my pleasure moderating it. And thanks for sharing your insights, all of you.
Thank you, Jonas, and thank you all.
Thank you.
Thank you.
Thank you.